This is what most trading YouTube videos teach. You'll use a short-term moving average and a long-term moving average and look for crossovers as your entry. You enter here and you exit here. It's easy money. You'll find this strategy in books, other YouTube channels, basically everywhere. It looks really promising, except that this typical moving average crossover strategy doesn't work. I'm sorry to burst your bubble. In a ranging market such as this, trading moving average crossovers will result in significant losses. When trading a typical moving average trading strategy, what others won't tell you is that crossovers work less than 20% of the time since markets are always consolidating. Here's the reality of how a typical trading day looks like. With all the choppiness and false signals generated, it will be a miracle if your trading account lasts more than a month. And that is why in this video, my goal is to show you how to use the moving average crossover correctly. If you are currently using a moving average crossover strategy, then this video will save you a lot of money. So be sure to watch this video till the end. I can't promise I will make you thousands of dollars, but I can promise you that I will save you thousands of dollars in losses. By the end of this video, you will learn that the moving average crossover can still be a very powerful strategy if applied correctly. I will show you how to combine it with two other elements to make it work. Before I share more about using moving average crossovers correctly and integrating them into your trading plan, I would really appreciate it if you could hit that like button and subscribe to the channel. It helps the channel grow and reach more traders like yourself. We also do a giveaway for every single video. If you want to participate in our giveaway, check out the instructions in the pinned comment. You want to look for an emoji in this video and comment on what the emoji is plus win Forex signals. Now, most of you have been taught that the trend is your friend, and that is why you want to use a moving average. That's not wrong, but that's not the entire truth either. Moving averages are lagging indicators that follow price, and thus they don't work on lower time frames where the trend is very erratic. By the time the signal is generated, the move is already over. In a ranging market, the moving average will also cross over multiple times, and you end up getting whipsawed if you keep alternating between buying and selling. For these reasons, you will have a tough time trading moving average crossovers on a 1 minute or 5 minute chart. Till date, I have not found one that works, but do leave a comment down below if you found something that works, and I'll be happy to backtest that and share with everyone my findings. If you are currently day trading the lower time frame like the M5 or M15, I would advise against using a moving average crossover strategy. Unless of course, you utilize a multiple time frame analysis like the triple screen system which I covered previously. I will leave a link to that video in the top right corner and at the end of this video, so check that video out if you have not. Now that you understand why the typical moving average trading strategy doesn't work, I want to show you how to use moving averages effectively, so keep watching. Moving averages help to determine the trend and direction. That's probably one reason why most beginner traders love it. You place it on a chart and at a glance, you can tell what the direction is. The first thing you want to focus on when using a moving average is the moving average slope. If you see that the slope is relatively flat, you want to avoid trading a crossover strategy since it implies that the market is in consolidation. If you see that the slope is angled upwards, then that is an uptrend. And if you see that the slope is angled downwards, then it is a downtrend. Pay attention to the slope. Don't just blindly trade any crossover. In an ideal scenario, you want to see that the moving average is sloping between 30 to 45 degrees. The steeper, the better it is. The next thing that you can use a moving average for is as dynamic support and resistance. If you are using two moving averages and looking for the typical moving average crossover, the area between the two moving averages can also be viewed as a zone of dynamic support and resistance. Here are a couple of examples here to illustrate this point. Earlier on, I established that moving average crossovers don't work in a ranging market and lower timeframes. But does that mean that the crossover is useless and you should toss it away? Well, not really. At the start of this video, I promised to show you how to use the moving average crossover correctly. So I want to go through that right now. So keep watching. When using a moving average crossover, it is essential to combine market structure and price action and not blindly trade every single crossover. This point is very important and I will repeat it again. Do not blindly trade every single crossover. You first spot the crossover, then evaluate the market structure and look for your entries. When evaluating the market structure, you are looking for key swing points which can act as support and resistance. When it comes to looking for your entries, you want to look for candlestick patterns like engulfing candles, piercing candles, pin bars, and such. I won't go through how these patterns look like because I've already prepared a free day trading guide covering all these patterns. If you have not yet gotten this candlestick pattern cheat sheet for some reason, the link to download this is in the description. It is 100% free, so please go grab it if you have no idea what I'm talking about. For now, let me walk you through a couple of examples to help you better understand this. Here, we have a bullish moving average crossover. That's a bullish signal. But we do not trade directly off the signal. We wait patiently for price to break the resistance, pull back to the level with a nice candlestick pattern, and then take the trade. Notice that we do not take the trade just because there is a bullish crossover signal. Here's an example where there's a bullish crossover, but the market structure was not broken, and hence we would not have taken any trade. So again, just because there's a crossover signal doesn't necessarily mean that we must take a trade. We need to evaluate the market structure and price action. Here's another example. In this case, we have a bearish crossover signal. After the crossover signal, price breaks the market structure and we could potentially enter a breakout trade. And over here, we have another example where there was a bearish crossover. Price breaks the market structure, pulls back to the level and forms a nice bearish engulfing candle. See how the moving average crossover can be a powerful signal if you know how to apply it correctly. You just need to combine it with market structure and price action. This is a relatively simple way to trade the moving average crossover. In the triple screen trading system video that I mentioned previously, I show you how to use the moving average in the higher time frame and drill down into the lower time frame to find your entries. So that's definitely something you want to check out next. And that's it for this video. I hope this helps you and save you a ton of money. I would really appreciate it if you could like this video and subscribe to this channel. Do remember to comment with the emoji plus win Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. I will leave the link to the triple screen trading strategy video here, and that's the next video that I recommend you watch next. Thanks for watching. I'll catch you in the next one.